So there are certain factors that may trigger another massive dump for Dogecoin and other cryptos. And in this video, I'm going to show you the truth behind it and what exactly is going to happen. But before coming to it, let's see the current crypto market situation. So we can see here that the market has witnessed a slight dip during the last 24 hours. From Bitcoin and Ethereum to Dogecoin and Shiba Inu, almost all cryptos are currently trading in the red. Overall, it appears that things have started to get ugly for the crypto market. And we can see here that there is a sudden and massive change in the crypto market sentiment. The Crypto Fear and Greed Index, which was sitting at the 52 level, has dramatically fallen to the 30 level. And it is clearly showing us that investors are back in fear and uncertain sentiment. And as I said before, there are some huge factors that are creating this pressure among investors. And this is why people are now saying that Doge and other cryptos are now going to see another dump from here. And I'm now going to show you exactly what is happening and what is the truth behind all this. So the crypto market is under pressure because investors are worried about the upcoming interest rate hikes from the Fed. The thing is that as per minutes from the Fed's most recent meeting, the central bank is still on track to raise interest rates next month. Moreover, in another effort to help curb inflation, meeting participants said they expect the Fed will have to begin reducing its nearly $9 trillion balance sheet by the third quarter. And soon after these minutes were released, stocks went into negative territory, with the Dow Jones Industrial Average falling 172 points, the S&P 500 2%, and the Nasdaq 3%. Meanwhile, Morgan Stanley expects the U.S. Fed to raise interest rates 6 times this year for a total of 150 basis points. And it further revealed that the Fed is likely to hike rates by 25 basis points at the end of its March policy meeting, followed by additional 25 basis point hikes in May, June, and July, with another 2 hikes in September and December. So this is exactly what investors are worried about. And this is exactly why we are now seeing that both stocks and crypto markets are under immense pressure. But this is not it. Another thing that we are now seeing is that the prospect that Russian President Putin will order a Russian invasion of Ukraine has weighed on global markets. So recently, we saw that the stock market rose after Russian officials announced a partial troop withdrawal from the Ukrainian border. But President Biden recently said that the possibility of an invasion remained very high. And as a result, markets are now concerned about the Russian troop buildup and a lack of trust in Putin's declaration that they are beginning to remove troops from the region. From Dow Jones and S&P 500 to tech stocks, the overall markets are on the downside, and the same is happening with cryptos. And this is why it appears that Doge and other cryptos are now going to see yet another price dump in the next 24 to 48 hours. However, there are some analysts and updates that are showing us that the crypto market is going to sustain this pressure. For example, financial advisory firm DeVere Group CEO Nigel Green has predicted that growing geopolitical tensions will help increase the mass adoption of Bitcoin and cryptos. And he believes that the geopolitical tensions have provided an opportunity to demonstrate the real-life use cases for Bitcoin and cryptos in extremely volatile times. And both retail and institutional investors are going to adopt cryptos even during these testing times. And while we just talked about how some investors are worried about the expected rise in interest rates, Dane Moorhead, CEO of Pantera, is still bullish on cryptos. And he believes that cryptos will be the best place to store capital following the potential fallout of interest rate hikes from the Fed. And he pointed out that asset classes such as gold and crypto don't directly correspond to interest rates as bonds do. And this is why investors are likely to come to the crypto market. All in all, I think crypto holders need to exercise some patience here, and the thing is that we may see another market-wide sell-off in the coming days. But it will not be too penetrating or prolonged, and things will get better in the long term, and I'll show you why things are going to get better. But let's first come to Dogecoin's price and another massive warning for it. So we can see here that Dogecoin has been trading in the red again, and although this isn't a massive crash, things may get ugly in the short term. And while its moving averages have turned bearish, the MACD level of Doge has also turned negative, indicating a bearish outlook. And another warning for Dogecoin holders is that top Dogecoin developer Ross Nicoll has just announced that he will be stepping away from his role. He said that will be stepping down from his role at the Dogecoin Foundation to avoid a potential conflict of interest as his employer might be moving into the blockchain space. He also pointed to stress owing to increasing workload by combining both duties. So this is negative news for Doge and the community. However, contrary to all the speculations out there, I don't think it is going to have a major effect on the growth of Dogecoin. The Doge Foundation and the community is strong enough to sustain the pressure of such situations. All in all, despite all these warnings, I think that even if Dogecoin dips from here, it will be for the short term only. And Doge will come out of it pretty soon. And things are going to get much better in the coming months. In any case, I'd like to remind you here that this is no financial advice since I'm not a professional financial advisor. So it is recommended that you do your own research before investing in cryptos. And with that being said, let's come to Bitcoin for a minute. So we are now seeing that Bitcoin has faced a rejection around the 44K resistance level. It has now initiated a downward trend in the last 24 hours. And the reason why we are seeing this downside movement from Bitcoin is the market pressure due to the Fed rate hikes news and the Russian issue. Meanwhile, senior market analyst Edward Moya believes that Bitcoin is paying the price for the accelerating de-risking mode on Wall Street. He also predicted that the fears of slower economic growth going forward could contribute to the risk-off sentiment and trigger a further decline in institutional involvement for Bitcoin. And while the current situation is looking bleak, crypto analyst TechDev is saying that Bitcoin holders don't need to be concerned about ongoing geopolitical tensions, as the charts may be telling a different story. And he said that while macroeconomic and geopolitical factors are suggesting uncertainty in the markets, he prefers to go against the consensus. He further said that he was looking at the RSI as well as other metrics including dormancy flow, which depicts the activity of old coins, and the stablecoin supply ratio, which compares the market cap of stablecoins to BTC. And according to him, these technical indicators suggest that Bitcoin is likely at the tail end of a year-long corrective period. And this means that Bitcoin is going to come out of this correction pretty soon. And although Bitcoin seems to be currently in the bearish cycle, there's a steady surge in the floor of active users when compared to previous bear cycles. So this means that while investors remain bearish, the top-tier whale addresses continue to accumulate. And as per data from Santanet, Bitcoin's top addresses with 100K coins currently hold 664K Bitcoin after sitting at just 260K in February 2021. So this means that whales are still bullish on Bitcoin. Meanwhile, analyst Matthew Hyland is still bullish on Bitcoin, and he is saying that even after this price dip, Bitcoin is still above the support levels. And this means that Bitcoin hasn't entered a bearish cycle, and things are going to get better for it. And now if we compare Bitcoin's current chart with its price chart from 2013, we can see here that there are many similarities. And in the same stage in 2013, Bitcoin was stuck under the moving averages. And when this happened back in 2013, Bitcoin initiated a massive rally to the upside. So if history is any indicator, then we can expect another rally from Bitcoin in the near future. And while there is some uncertainty in the market, we are still seeing some very positive news for cryptos. For example, Ukraine has officially legalized cryptos as the Ukrainian parliament recently adopted a law that legalizes and regulates cryptos. So Ukraine is now the 5th country to establish basic ground rules for the crypto industry. And this is a very positive update as we are now seeing that governments around the globe have started to realize that Bitcoin and cryptos are here to stay. And another very positive news is that Texas-based Conoco Phillips, the 3rd largest oil company in the U.S., is now generating additional income in the Bitcoin economy. The firm recently launched a Bitcoin pilot project in North Dakota's Bakken region selling to crypto miners the flare gas that it would have otherwise burned. And in this way, the firm is generating huge revenue through the Bitcoin economy. And this is positive news because it shows us that cryptos are benefiting more and more sectors. And now if we return to Doge, despite its sluggish price movement, some of its technical indicators are still very bullish. We can see here that its price correlation with Bitcoin is still very high. And since we have just seen that analysts are predicting massive gains for Bitcoin, I think Doge can do the same. In any case, what are your thoughts on this? Do you think Dogecoin is going to move to the upside from here? Let me know in the comment section below.